Aloha and welcome to Java. Thank you kindly for joining me. It is November 10th, 2024. It is also Sunday, so I hope you're having a wonderful weekend. I would like to go over a few things, not just what happened this past week, which will affect us definitely going forward, but this coming week that we can look forward to as far as the markets and a little bit beyond in the larger view of the economy. So tomorrow is Veterans Day. We will have memorial for them. The bond markets are closed. However, the stock markets are open. So with this, let's look forward into what we've got at the moment. The MMRI, our favored risk indicator, is at 280.7. So now it's rising slowly, but still heading back up. We've got the fear greed, more greed in the markets. A lot of retailers jumping in again as they're watching this flurry into stocks, money flowing into stocks, cryptocurrencies, gold. For the most part, any asset to stay out of cash. Now, this is with the roaring inflation that will be coming back. So, the sentiment right now, we've got a couple of things happening: a rush out of cash into risk on assets. But we've got a pattern that I'm seeing in the stock market charts, quite a few of them emerging now, and I would like to bring this to your attention. Now, we've got morning, the first hour, we've got a lot of volume. So, buying in starting with heavy volume green in the first part of the morning, then an institutional sell-off on that pop. Once that sells off and heads towards a low for the day, then the buy the dip mentality steps in retailers again. As this makes the stocks rise again, we see an additional sell-off toward the end of the day once that volume hits again. So what does this look like? This is institutional money basically watching the pumps and using that as an opportunity to get out of more positions and go into more cash. Now, why would they do that in a risk on environment? It's because they are looking forward to a few of these other indicators that we are looking at as well. Now, the 10-year yield tomorrow will remain flat rather, because the bond market is closed. But we're watching relative strength of the dollar now. Did pull back. That allowed stocks to fly. The relative strength of the dollar is weakening. However, on Trump's presidency announcement, we did watch an anomaly. And that is that even though it's losing strength overall due to the inflation fight, it is now stronger than relative currencies. So this is the trade issue stepping in and some of the other policies they are looking at, bank deregulation that they are looking forward to. With this, we've got cryptocurrencies also on the rise. Now, Bitcoin reached 80,000 for the first time last night. This is continued optimism over the incoming administration being severely cryptocurrency friendly. So, with this, cryptocurrencies all on the rise, rising tide for all ships rising. So, we've got Bitcoin. I've heard a lot of this, so I wanted to address this. Bitcoin target of $100,000 by the end of the year was asking if it's realistic. Is it possible? Yes, in my opinion, not financial advice. Is it possible? Yes. Realistic? That's a significant rise before the end of the year. Could it? Yes, I think it will hit this target. I'm just not so sure it will be prior to the end of the year. So they're talking about strong bullish catalysts. I agree, very bullish. However, I don't know about that quickly. We'll see. That remains to be seen. So, with this overall environment, what I want to bring up, more important, what does this mean? It means more inflation in the long run, not more inflation, but massive inflation. So, unless they truly can get spending down and get a hold of this, these are basic inflation plays coming to fruition. And with this, I've got a tale of two cities, basically in countries, with this in reality. One is China. Household cutting spending because they're experiencing inflation again, prices rising, they cannot afford it. So they're cutting their spending. That means that the government, Fed bank, central bank, will likely entertain the thought of hiking rates again. If they do, it will strengthen the Japanese yen versus the dollar. We could have another issue if they sell off the debt in order to basically take care of their currency. So we had a problem with this before, and this could happen again. Now, on the other side of this inflation coin, we've got China as the other example. So, China price growth staying near zero as their deflation persists. Opposite problem. And with this, the large problem is that China just floated or flooded their economy with 1.4, the equivalent $1.4 trillion. This should have given their market a boost, made prices rise, but instead deflation is persisting. This is a warning signal that they're hitting that spiral down the drain. Deflation is the first step and the first level toward depression. Severe recession, depression, that is the direction they're heading. And the fact that they flooded this with the QE and it's still heading this direction means that the government, despite printing, is losing control. Now, this is what the United States could look forward to eventually as well. We are the reserve currency as a moment, so watching all of this, but these are showing the two paths down to the next major issue we're going to have in monetary issues with currency. So with this, we've got the calendar that we're looking forward to this week. This is an issue with the currency devaluing. So we're going to watch some numbers. CPI, again, bond market closed Monday, but Veterans Day is open. So if you're a retail trader, your keys you're going to watch. Bond market will be closed. You're going to watch the relative strength of the dollar. You're a bit flying blind without some key indicators. Watch the volume. Lower volume has more spikes, higher volatility. Okay, so with this, we've got more Fed rate cuts expected December. Right now, they're expecting another quarter point. How will this affect you? If they do anything outside of this, it could rock markets a bit, so I doubt they will. But we're watching that. After that, they're going to have to give us guidance from there. So we've got US inflation progress getting harder at the last mile down. With this continued inflation, Fed target rate is not going to hit 2%. Very unlikely. If we do, it's a very negative signal, in my opinion, because that means we are heading more rapidly down that spiral of deflation. So with this, I want to bring up Germany's Merz, open for deals with Trump, calling Scholz a lame duck. So they have moved forward. They've got a severe crisis in the German government. And a large part of this was caused by the overspending and funding Ukraine. So I have to be very careful what I say about that. Certain words still targeted basically for the, that they won't put out the video. So these are earnings we are expecting out this coming week. Got a few big ones coming out. We'll be watching those daily. So back to the German government, we've got issues with this. And this is more of an issue with the EU. Ursula von der Leyen is going to have to rein this back in somehow because the United States, with the incoming new president, will change the way that these relations are going. So, German foreign minister was explaining that the money that they sent was cut from schools and daycare centers, and also the railways were not monetized. So, saying that they got the money over in Ukraine for nothing, and German children and infrastructure were not funded because their focus was to support the other efforts. So now they're suffering, their government is crumbling. They've got major issues within the EU, and this will have implications that will kind of ripple out. So we'll keep an eye on that as well. Politically, never good to let that drive the finance. We also had this issue back in the United States that a supervisor of government funded spending, that is FEMA, Federal Emergency Management Association, told them to avoid certain homes with certain political turnings, and now blaming farther up the chain. And not surprisingly, she got sacked before a lot of that could come out. We'll see what happens. Now, with this, I'd like to turn back to the real economy and a little bit more in the trade, the larger sector. We've got Japanese car giant announcing mass layoffs. This is Nissan, going to slash 9,000 jobs globally. Now, globally will also affect back domestically in the United States, but also with the EU. So this is largely Western, even though it says globally, largely Western dominated jobs that are dropping. Over 20,000 jobs affected globally as another auto giant companies restructure. So this whole sector of the auto industry is crumbling a bit, but there's good news with a couple of independent companies, so not across the board. LG's EV battery was 6 times more energy storage to power Rivian. So Rivian, this is just coming out. They're set to compete with Tesla's Model Y. So that's going to be an interesting thing to watch. So with this, there are still some movers still heading towards the green, looks like at the moment, although there's going to be a few fumbles here and there. So close watching for tomorrow in particular, as we're going to be lacking a major indicator for the markets. So with this, I wish you all a wonderful rest of your weekend until I see you again. Stay free.